Hello, everybody. Hoping you are doing okay. You will see on the screen a poll. While we get started, it would be interesting to understand from where you are dialing from and what is the sector that you're working in. And this will enable us to actually tailor the discussion accordingly to your background. And so while we get started, please take a moment to answer the poll. I'm gonna put it in the chat as well so that everybody is on point. And let's give potentially a couple of minutes for receiving more people. We have 17 online already. And yes, I'm hoping you are enjoying your day. It's towards the end of the week. And it's not very sunny here in London where we are based. But, you know, we do what we can with this weather. Maybe one more minute and we start. It's interesting to see the different people dialing from the different countries. I'm going to share the poll quite soon. Mostly of them are from Europe, but we have some presence from Africa, North America, and Asia as well. Most of them are in the financial service space, non-profit and philanthropy, some tech people on the call as well, education, academia. It's very interesting. We are expecting a large number of participants today. So we are just at 21 at the moment. Maybe I'll wait one more minute and we start. Yeah, big presence from Europe as expected, and financial services as expected. So let me share this with you meanwhile. And can you see the screen and the poll? Yeah, most of them coming from Europe and from the financial service space. Good, let's get started. Good afternoon, everyone, and welcome. Thank you for joining us today. My name is Antonella Bategiovanni. I am the Executive Director of the Financial Inclusion Forum. For those of you that are new to FIF, we are a London-based networking organization, and since 2005, we organize live conversation events around financial inclusion. And it's my pleasure today to actually have you on this conversation on financial well-being. Before we start, some housekeeping. We really enjoy and love participation and reserved a session for Q&A at the end of our conversation. So I really invite you to use the Q&A feature to make your comments, to ask your question. We will do our best to actually respond and address as many as we can. Now, I am very pleased to introduce you to Max Nino Zarazua. We will be our guide in our conversation today on financial well-being. Max has a wealth of experience in financial inclusion. He holds a PhD in economics and international development. And during the last 20 years, he's been leading projects with major donors, microfinance institutions, banks, international NGOs, on different topics that are surrounding financial inclusion and financial health. Max, it is an honor to have you leading this conversation today. And without further ado, I'm gonna hand it over to you for the kickoff. I'll see you at the end of the conversation. Thank you.
Thank you, Antonella, and good afternoon and good morning to everyone. We are very pleased having a very diverse audience, and we hope we can enjoy this conversation, as we call it, with some colleagues. Before I move to the introductions, I would like to talk a little bit of the context for this webinar today. And over the last 10 years, we have seen a global coalition of donors, governments, multilateral organizations, and financial institutions, all working towards expanding financial inclusion, especially for unserved or underserved populations, and more focus on the global south. And we have seen important progress that has been made as well. We see that according to the World Bank Findex 2021, the adult account ownership increased from 51 to 71 to 76%, sorry, from 2011 to 2021. That was globally. And if we see developing countries, that same increase in the same years went from 42 to 71%. So this is an outstanding achievement in terms of expanding access to financial services for unserved and underserved populations. However, increasing account ownership or even financial usage might not necessarily mean that people are financially healthy. We have seen that the main focus of financial inclusion has been expanding access and even expanding or increasing usage. But this view is not enough to achieve a positive outcomes in the financial health of users. So for example, if we take Kenya is a good example of this. Kenya increased from 26.7% in 2006 to 83% in 2021. And this was mainly due to the increased provision of digital financial services, especially e-money. But despite of this extraordinary achievement, the population's financial health has declined from 39.4% in 2016 to 17.1% in 2021. And so there is still work to do in order to shape a future of financial well-being for all, as we call this webinar. And for that, we have an extraordinary panel today that we are going to talk and discuss their experience in working with financial service providers, but also implementing strategies to improve the financial health of their customers. So I'm very pleased to introduce you to our panel, and I would like to start off with Davide. So if each of you can introduce, please. So we start with Davide. Down to you, Davide, please.
Okay. So good afternoon and good morning to everyone. So my name is Davide Castellani. I'm professor of banking and finance and microfinance at the University of Bergamo in Italy. I'm also co-head of the action group from research to practice of the European Microfinance Platform, and I've been working in the field of financial inclusion for more than 15 years as a researcher, but also as consultant. So thank you, Max.
Davide. Now Deborah, can you introduce yourself, please?
Yes, of course. Thanks, Max. So I'm the Executive Director of Opportunity International, a global network that's been involved in financial inclusion and microfinance for over 50 years. This is a topic really close to our heart. So we've mirrored that journey, Max, that you were talking about, from access to usage to a more holistic approach to financial health. Back in the early sort of 2000s, when we were focused on access, what we were finding was that we were doing really well in terms of helping people living in poverty to open bank accounts, but the balance on the accounts was low, and the dormancy of those accounts was actually really high, anything from 20 up to even 70%. in different account categories. So we've moved much more to look at issues around usage. We've invested really heavily in financial education, in technology, and really helping our clients to manage their financial lives. And that includes perceptions. I think we'll come on to this around confidence, around agency, and around control. And for Opportunity International, that financial health lens really requires us to be much more focused on outcomes. And I can talk a little bit about that and how it's reflected in our new theory of change and our results framework. But thank you for having me.
Thank you, Deborah. We continue with Trey. Please, down to you, Trey.
Thanks, Max. Nice to meet everyone today. My name is Trey Waters. I'm with the Financial Health Network. We are a US-based organization that works with financial institutions, fintechs, the nonprofit sector, credit unions to help build consumer financial health here in the US. Before joining Financial Health Network, I spent about 8 years working in international development in the financial inclusion space. So it's been quite the great opportunity to see both worlds. And so excited to talk to everyone today about both kind of what we have been doing in the US around financial health and how it can fit into what you all have been working on historically on financial inclusion and the journey everyone's making towards kind of the access and usage to more looking, as Deborah said, holistically at people's financial lives and how solutions can fit into those. For a little bit of background on who Financial Health Network is, we are a nonprofit organization based out of Chicago. We have about 50 staff, and we do a broad variety of activities to support financial health here. So we have a team that focuses on research, looking at financial health of consumers. We have an annual financial health pulse report that we put out that measures financial health in the United States and how it changes year over year using our financial health framework. Through that research team, we also have our spend report, which is a report that we do looking at fees and how fees impact people's financial health in the United States. We also have a consulting arm. That's where I sit on the financial services team. And that's much more working closer with the private sector in terms of having them embed financial health into their products and solutions, but also into their business models, which we'll talk a little bit more about today. And then finally, we have two other pieces that we do is we have a network of members, which are financial institutions that are sharing best practices and working together to think about financial health and how to advance financial health. And then finally, we have an annual conference we do every year about financial health. We just had it last week. It was really exciting to see both a lot of folks in the US there, but we also had a growing international presence as financial health expands outside of the US and to other markets. And people are kind of curious what we've been working here on the US. So really excited to join everyone today.
Thank you, Trey. And last but not least, Nancy. Please, Nancy.
Thanks, Max. And good afternoon, good morning, probably even good evening based on that poll result, Antonella. So nice to meet you all. And thank you for letting me join the conversation today. I'm Nancy Thomas. I'm the Senior Microfinance Advisor on the Lend with Care initiative from Care International UK. Care International is an international NGO with the kind of remit and mission to save lives, defeat poverty and achieve social justice. And Lend with Care is kind of one initiative that Care International UK started and launched back in 2010, and it is incorporated in our kind of the work that we do at Care around financial inclusion and what we call more broadly women's economic justice. Lend with Care is essentially a crowdfunding platform. So we use the platform to raise small loans for small entrepreneurs around the world. And we do that through a network of financial service providers. So at the moment, the Lend with Care platform is working in 15 countries with 19 different financial service providers. So those are organizations that are providing microfinance services, but they have different kind of registrations and legal registrations in the countries in which they operate. So some of those are microfinance organizations, some of those are NGOs, social enterprises, financial cooperatives, but all working to reach and serve underserved or underbanked communities with microfinance services. And we use the Lend with Care platform to raise that loan capital, which is then on-lent by those local partners. So my job is to work really closely with those financial service providers, really look at and strengthen the work that we do to ensure strong client protection, ensure that the products are affordable, that they're appropriate, that we kind of that we can demonstrate that we are achieving those missions that we set out to achieve, and also identify new partners to work with. So we can talk more later about my experiences with those partners and kind of what they talk to me about in terms of how we look at financial health for their customers. Thanks, Max.
Thank you, Nancy. And thank you, everyone. We have a very interesting and diverse panel today. But well, let's start the chat or the discussion about our topic. And I think it's always good to start with basics. And I'm going to ask Davide, he can help us to understand and explain what financial health is and how it relates to financial inclusion and impact, which is for this discussion is very important. And also, Davide, if you can, cover how do we measure and improve financial health for clients, and what are some of key metrics that we should focus on?
Yeah, so thank you very much, Max. So I see that my role here is to set the stage a little bit, right, about what is financial health, how to measure financial health. So let me say that, first of all, financial health goes beyond mere financial inclusion and the usage of financial services. So it's more about how those financial services are used and how they contribute to improve one's financial well-being. So financial health encompasses a holistic state of being where a person is in control of their finances. So it's about control, can meet ongoing financial obligations. So it's also about resilience, feel secure enough to absorb financial shocks. So security, right? And has the freedom to pursue and take opportunities over time. So freedom, right? So we mentioned 4 different dimensions: control, freedom, security, and resilience. Now, when we go to defining financial health, is however very challenging because we have these 4 components. So it's it has a multi-faceted nature, and moreover, so let me say this is not going directly to affect how to define financial health, but financial health is influenced by various factors. So some factors are in control of individuals. So we talk about attitudes and behaviors, so financial attitudes and behaviors. Other factors are partially or fully out of control of individuals, so socioeconomic conditions and microeconomic environment. So starting from these, so what we can say is that financial health stands in the middle, not necessarily probably in the middle, but let me say between financial inclusion and usage of financial services and impact. So it's a process, so it's a step necessary to generate impact in the long term. Okay, going back to the challenges in the definition, another challenge is the dynamic and subjective nature of financial health, similar to impact, right? What's the most important for an individual? What can constitute financial health can vary significantly among individuals based on their life stages, geographic location, and personal circumstances. So for some individuals, resilience is more important than control, or for others, freedom is more important than security. And given that, so the definition must be flexible yet comprehensive. So that's very important. When we go to measuring financial health, so again, we have these 4 dimensions: control, security, resilience, freedom, and so selecting appropriate indicators is complex. However, indicators should be simple, contextually relevant, and practical to collect. For example, right? So if we want to measure financial resilience, so one simple way to do that is measuring the ability to save regularly and the ability to handle unexpected expenses. So we can measure that, in different ways, posing different questions. But I mean, the idea is going into building some proxies that can be most relevant than others in measuring that dimension. Going to the challenges in measuring. So again, financial health has this multi-dimensional nature. And so it requires a comprehensive set of indicators. Second, collecting data on sensitive financial behaviors can be difficult. So we are asking questions, about whether you are able to cope with shocks, with financial shocks, right? So I mean, it's a very sensitive, let me say, sensitive question. And indicators need to be adaptable to different contexts. So again, this is again related to what is important for one individual or one group of individuals over another group of individuals. So what constitutes financial resilience in one country might not apply in another, due to varying economic conditions and social safety nets. So when where there are no social safety nets, maybe resilience or security is much more important than freedom and control. When we talk about how to improve financial health, so I want to go fast over, the question that you posed to me, because I want to let more time for the other guests to provide their experience based on these initial settings. So when we go into improving financial health, well, so apart from macroeconomic factors, apart from socioeconomic characteristics, so if I am an FSP, how can I, or an organization, how can I improve the financial health of my clients? Well, one key element is financial education. So with financial education, we can actually enhance financial knowledge, skills, attitudes, behaviors. However, the challenge here is to translate financial education into better financial decision. And so that's not given for granted. Another important, let me say, lever that we can use here is the design of financial products. So if we are able to embed behavioral insights into the design of intervention of financial products, then we can nudge individuals to take better financial decisions. So such as regular saving or prudent borrowing, okay? So it's also our responsibility to design products that that lead to better financial decisions. And if we want to talk more in general about what regulators can do, well, probably consumer protection laws. They are important, but we also need to take preventive measures, as well as measures after something happens. So we also need to design a regulation, laws, procedures that they can act ex ante and ex post. And then talking about key metrics, so there are probably 4 key metrics that we can focus on. One is the savings rate. The second one is debt levels, so monitoring debt levels relative to, for example, income. Emergency fund availability. So if individuals, they have an emergency fund, and if the emergency fund is enough to cope with potential shocks, and expense tracking. I think these 4 are the most important matrix that we can focus on. Thank you very much, Max.
Oh, thank you, Davide. I would like to pick up something you say very important about measuring, which is very context specific. And regarding to that, I would like to move now to Trey, because Trey have been focused on the relationship between financial health and financial inclusion in the US. So Trey, can you share some insights on how the US-based financial institutions are adopting financial health frameworks, and how transferable are these practices to other regions, particularly in the Global South?
Great, thanks, Max. So I'll say that for a journey in the United States, it's been actually fairly similar to the journey that we're talking about today. For Financial Health Network, we started looking at the un- and underbanked. And one of the things that we started seeing in our research was, while there was a population of un- and underbanked in the United States, the banked population was finding that the solutions that were in the market weren't working for them. And there was a large group of people that had bank accounts, but they were predatory in terms of the interest rates that they were offering. They had lots of fees attached to their checking accounts. And so as we saw this, problem in the market in the United States, we did the kind of thing that everyone here is talking about, is taking a step back and think more holistically about the consumer and if the financial tools that they're available to them are working for them. And was one of the concepts that we introduced to the financial sector in the United States and started talking to people in the large banks like Chase, Bank of America. We've also been talking with people in the fintech space like Chime, which is a large neobank here. We've been working with the nonprofit sector, and we've also been working with credit unions in the US. And initially, when we brought this idea to them about looking holistically at somebody's finances, we got kind of some shrugs, or, okay, what does that mean? What does that look like? So to help kind of move this forward, we built a financial health framework, which is very similar to the one that David just shared with everybody. Our framework looks at somebody's ability to save, spend, borrow, and plan. And looking at those as the 4 categories that make up somebody's financial life here. We introduced this in a measurement framework to these institutions, and we've seen different people embrace it at different levels. One of our key partners is a credit union here called BECU, and they have taken this framework and started maybe about 8-9 years ago, surveying their members on an annual basis to capture their financial health. What we did find was, when engaging with financial institutions about this, that measurement was the best starting place for this engagement in these conversations, because it was really hard for us to talk about how your solutions are improving someone's financial health if people didn't really have a good basis of what financial health meant for people or within their institutions. So like I said, we released a framework, I want to say it's about 8 or 9 years ago. We are actually in the process of updating that framework right now to measure financial health, knowing that things have evolved over time, and want to think about how that might change in terms of what we've learned in the sector since when we first developed the financial health framework. The other thing that we're seeing in the US is people that want to start embedding financial health into their business model. And I think we're going to talk about this more later on, but I'll try to kind of give a high level of what that means right now. So it's taking the foundation of measurement and looking in terms of how is it fitting into the organization's strategy decisions? How is it fitting into the customer or member experience? How is that data being used for the solution design process? And we're starting to see more and more institutions develop or embrace that as key components in terms of how they make decisions organization-wide. So how does this look outside of the US? I think when we are at a higher level, a lot of the concepts that we're working on in the US could be transferable to other locations. So the ideas that we just shared around measurement and going out and getting a better understanding of the financial health of your customers or members. Taking a pause here, when I say measurement, Financial Health Network has traditionally talked about this from a survey-based methodology. but we're working more to look at administrative data and data that financial institutions already have to build out financial scores internally. And we can talk a little bit more about why we're making that transition and why that's a area of focus for us as we go forward. But so back to how this could transfer to the outside the United States. Starting with measurement, I think is something everybody can be doing. And it's one of those things that you can go out and measure your customers and looking at what the financial health challenges that they're facing, and you'll find that it's going to be different for different people. So using an example of kind of back in my financial inclusion days is smallholder farmers, right? The income level for a smallholder farmer is volatile throughout the entire year. So by taking a financial health approach, you can be looking to see, hey, are our savings products in front of this smallholder farmer at the point when they go sell their crops and they have this surplus of money? And how can that saving product help them smooth their spending until they get to the next planting season? Are our credit products meeting that smallholder farmer when they need to be buying agriculture inputs? You know, how are our products and services just kind of showing up and with that group's needs? So these are kind of some examples of how this could look like outside of the US. And I am getting a note that it's time to move on. So I will pause there and hand it back to Max.
Thank you very much, Trey. You talk about the importance of measuring as, as a important or key starting place when we want to measure financial health or know the financial health of the users. And I think now I'm moving to Nancy, because Nancy, you have been working very closely with financial service providers in 15 different countries, this is a very good, diversity of different providers. So what is the importance of measuring the impact of financial well-being initiatives and how partners are tracking outcomes, and whether these outcomes are tracked adequately, and what is, in your experience, the issues that your partners are facing in order to collect this information?
Thank you, Max. I'll try and keep it brief. I know we're running a little bit over time, but I mean, yes, it's important for us to understand as Lend with Care, but also our partners to understand kind of how the microfinance services that we are providing can impact on the financial health of the customers that we're serving and we're reaching. And as you mentioned, Lend with Care is working with financial service providers predominantly in the global south, operating in low, medium income countries. And so we're talking about reaching and serving, particularly vulnerable or marginalized populations with financial services. And it's important because Care and Lend with Care, but also our partners, believe that when people, particularly low income and or marginalized people, have equitable access to and control over economic resources, then they really do have a greater chance of kind of improving their lives, that of their families, and ultimately the goal of kind of escaping and moving out of poverty. So it's really important actually that we look at how these services are impacting on financial health. And my experience tells me, I've been working for over 10 years now with, we have 19 partners now, but we've worked with different partners over the years, that these financial service providers, they're small to medium size, they do understand and recognize the importance of financial well-being. Not only because it makes good business sense, you need to have and you want to be working with financially healthy customers in order to ensure that you have repayments and that the operational self-sufficiency remains stable, and that's important from a business sense, so they get that. But as I said, we select and we work with partners who can demonstrate to us during the due diligence stage that their missions align with ours, that they're also committed to this goal of trying to kind of improve economic well-being and increase resilience. Having said that, I think the conversations that I have with our partners, two main, I don't know if I want to call them issues, but things that come out of those conversations, if we're looking at how and if we can measure the impact on financial health and well-being, firstly, I'd say is that what I see is that as a sector, and and then with care is also guilty of this, that we're really good at getting lots and lots of data on reach. Within our sector and within this industry, we know a lot about. We have a lot of data on the numbers of customers that we're reaching. We have a lot of information. We can disaggregate that data. We know the gender of those customers. We know the age. We know if they're rural, urban. We also know information about those customers in terms of the financial services that they're able to access, the loan sizes. Are those loan sizes growing? Are they able to repay on time? But I think where we have all that data, we're really good at collecting that data. We're probably lacking a little bit. I see a gap really around how we're translating and using that data to understand what we're talking about today, which is kind of more broadly bigger than that in terms of financial health and financial well-being, and really importantly, resilience. I think we'll talk about later, the world that we're living in now, resilience is such an important thing to be considering and thinking about how we contribute to that. And I think that's probably the role of really where I see sort of partners come in. And that's where I think then with care, and care can provide that kind of maybe that expertise, maybe that support for financial service providers to really start building up that capacity to look beyond reach and look at the outcomes and look at impact. And then just finally, in addition to kind of that, the other sort of challenge, I suppose, is that I think, Davide talked to this in the beginning about how understanding what we mean by financial health, because in the conversations I'm having with our partners, this is not the language that's being used. People are not necessarily talking about financial health. So I think it's really important that we are clear, and that is why these conversations are so important. What do we mean when we're talking about financial health? How do we measure it? Are there frameworks that we can already use? Like Trey's also mentioned that financial service providers operating in Global South can use, and reframing it, because I think a lot of what I mentioned, that data is actually giving us good insight into the financial well-being of customers. We are, financial service providers have a lot of information about income and expenditure of households. They have good information around debts that are being managed within a household, repayment rates. We've got information on build-up of savings, all those things that Davide mentioned that could be indicators of how someone's financial health is changing over time. So I think, that's another thing that we really need to look at. What is it we mean? What metrics can we use to be measuring that? And just reframing it a little bit, that, we're not just looking at those indicators and those metrics to enable us to understand if these customers are low or a high risk for our business. It's also understanding what that means in terms of us achieving our mission, because as I mentioned, our partners all have social missions, and so does care. And so if that is what your stated remit is, then that's also important, that's kind of the driver behind why you're also collecting that data and that information.
Thank you very much, Nancy. That's very interesting and revealing about still some of the needs that financial service providers need to have, and I think Deborah can also complement very much your experience with care, but Deborah with Opportunity International, because Opportunity International's work have use data from clients to run different studies. So Deborah, what have you found to be the main benefits or challenges that you have experienced in applying outcomes data to improve management decisions and client serving strategies? And also if you can talk about, if you can give an example of what you are learning from data. And to you, Deborah.
Excellent, thank you, Max. And yeah, I first to say I absolutely echo Nancy's sentiments. That's exactly the journey that we've been on at Opportunity International. Perhaps I'll start with talking about something that we're learning from the data, which is quite topical because we're getting outcomes data currently from our participation in this year's 60 decibels microfinance index. And perhaps I can give you an example from one of our partner MFIs in Indonesia. So as a result of the data that's coming out, 93% of clients are telling us that their quality of life has improved because of the MFI. 94% are telling us that their business earnings have improved because of the MFI. So in a sense, it's a pretty encouraging picture. But if we were to look, for example, through a resilience lens, and bearing in mind resilience is a key component of financial health, as Nancy was just touching on, it's much more of a mixed picture. So clients are asked to imagine that they have an unexpected emergency and they need to come up with the equivalent of, I think it's around $20 within the next month. These clients said, only 2% of clients said it would be very easy to come up with that amount of money. And 44% said it would be very or somewhat difficult, which is, quite a different picture. And so also when we take that data, we can then slice it, of course, and we can see which client groups, which segments are more vulnerable, which are less vulnerable in terms of resilience. And I think what we'd all expect probably is a correlation between income or poverty level and ability to meet an emergency expense. And yes, in fact, is the example that I just gave you from that partner MFI in Indonesia. Certainly the clients who were experiencing the highest poverty levels were also the most likely to find it difficult to come up with or to meet that emergency expense. But interestingly, we didn't find that finding that correlation coming out of other data sets from other partners that we work with in Indonesia. And in fact, if we look at our data from sub-Saharan Africa, and actually this is going back to last year, that data for this year is still coming in for those partners. When we look at a regional level in terms of opportunities portfolio, what we might say are the least poor clients from one of our partner MFIs in Ghana, they actually had by far the most difficulty in meeting an emergency expense. And it was about something like 55, 56% of borrowers said they found that somewhat difficult or very difficult. And I think, again, that sort of highlights that paradox of financial resilience, that income and wealth aren't always the best predictors of an individual's ability to respond well to financial shocks. And for us as Opportunity, it means that we really need to be more attuned to the drivers of financial health over and above increases in income. So just quickly, in terms of the benefits, I think we've come on a very long journey. As you can imagine, we did struggle in the past with the lack of credible data, lack of insightful and timely data in particular. Doing it in-house, we struggle with doing that robustly. When we use external data collection in the past, it was really expensive, and then we find ourselves, that data is limited to serving our external stakeholders rather than translating the data into management decisions that can help our clients. And so that industry shift, better tools, better techniques, has really helped address those challenges. The 60 decibels index I just mentioned has advantages of significant economies of scale, and that scale then enables us to benchmark. And actually the timely data collections, we can share that data with our partners within weeks of it being collected from clients. That then is timely enough to inform management decision making. And going back to Nancy's point about buy-in and trying to encourage encourage our partners to invest in that data on financial health, I think that's really important. And then finally, in terms of the challenges, yes, for something like that, which is client reported, sort of self-reported data, there are some challenges. The sample size is great when we're looking at institutional performance, but doesn't really allow for that disaggregation that we need to compare across products and services and really identify what the drivers of financial health are. Is it some access to credit? Is it financial literacy? Is it something else? And so what we do then is combine that kind of data with perhaps more qualitative research. We're doing a lot of work now with the University of Bath around the qualitative impact protocols to really dive into what those drivers of change are for our clients. And just to give you very briefly an example from Ghana, we found that our empowerment work with female smallholder farmers, 58% of borrowers were reporting increases in income, but actually over 80% were reporting increases in household decision making. And that qualitative approach then helps to really help us to identify what those drivers to financial health are. Thanks, Max.
Thank you, Deborah. That's very interesting, and thank you for giving us also examples of how methodologies and tools can also provide information for this decision-making purposes for financial service providers. Now I think it's a good opportunity to talk about business cases, and I think Davide can introduce us to an idea of business case for financial health very briefly, and then we can move to our other panelists to give us examples that they have experience with different business cases. So Davide, if you can give us, in a couple of minutes about, this business case for financial health, that will be very helpful.
Yeah, thank you again, Max. So this is something that we've been working on within the action group. You are also part of the action group. We are co-eds of the action group, so you are very aware of what I'm talking about. So we as you said, right? So measurement is key, but what we found out is in order to prompt financial institutions to measure financial health, they need to understand what is the business case behind that, right? So let me say, so is there a business case for the measurement of financial health, not only of taking a financial health approach? So let me say that there is, and probably one of the most important, let me say, benefit of prioritizing clients' financial health is the enhancements of client loyalty and retention. And this has let me say, a positive cascade effect on the general performance of the financial institution. So I want to do, say that in a very concise way, but loyalty and retention, they have let me say that they can have a very important financial performance effects on both liabilities and assets of an FSP. So you are able to offer, deposit services at a lower interest rate, and you can translate those benefits to borrowers. So you are able to remain sustainable while reducing interest rates on both assets and liabilities. You can also experience, better lower default rates because people they have better financial health. You can also expand market opportunities by designing new products that are able to address financial health issues, and there is also, positive effect on reputation, competitive advantages. And so I really see the business case there. So, but I would like to hear more from, our practitioners. Thank you, Max.
Thank you, Davide. Perhaps Nancy can walk us through some of the challenges she has found with some financial service providers with these type of business cases.
Yeah, thank you. And I will keep it brief because it would be good to get some questions. Yeah, so I mean, not necessarily a business case that I'm going to sort of talk you through briefly now. It's more, like Matt said, the challenges and kind of what are our expectations around small to medium-sized financial service providers that I described in my introduction that we work with in terms of really pushing forward and promoting this financial health agenda and kind of measuring the outcomes and the impact of the work that we do. I think they do have a responsibility. I think it is partly financial service providers' responsibility to be measuring financial health and to be looking at that. But I think it really needs to be a collective responsibility. And, we talk about these kind of surveys and impact studies or outcome measurement initiatives that we introduce, and often they involve third parties and require other organizations maybe with specific expertise or skills to do that and to complement the work of the financial service providers, which is fine and great, and that's where I see the role of people like Care and maybe even Opportunity. But in terms of kind of how we really operationalize this into the everyday activities and the core business of the services that financial service providers deliver, I think this is a challenge. So my thing really today is actually putting forward the challenge for that. And I think if we think about the context in which these financial service providers are now operating, it's even more challenging than I've ever experienced before. So as I said, I've been working for over 10 years with financial service providers in the global south, and the context now is ever more challenging. Post-COVID, we've obviously seen huge economic instability. Many of the financial service providers are still recovering, and we're expecting recovery to take, time. Alongside that, we're obviously seeing increased numbers of conflict around the world, conflict lasting longer than it ever has before, as well as living and breathing, a climate crisis. So the challenge, I think, is how we convince really financial service providers who are really trying to operate in incredibly challenging environments just to do what they see as core business, which, as we mentioned, core business does have a contribution towards financial health. But we know that really to have that kind of bigger well-being impact is not just the financial services, it's the things that the other panelists have mentioned today. But how do we set the case? How do we for a financial service provider to really kind of incorporate that and operationalize it? Because my experience is that it costs money and that it requires skills and knowledge that maybe are not already there. And so yeah, that is a challenge I'm kind of setting. But also for us as Care, what we do, or Lend with Care, is really focus. And I think Trey mentioned this around product design, because actually that can be quite simple. If you're listening to your customers, if you're getting that information from your customers, whether it be through surveys, whether it just be through conversations that loan officers have, or internal audit going to do their spot checks, but there needs to be a real tight mechanisms in place that are effective, that are accessible, that people and customers can tell you what it is that they need. And I think the only other thing I would add, because I know I don't talk too much, is that we need to understand that those needs change, and that's really critical. So it can't be a one point kind of insight into the lives and the needs of those customers. This is an ever-changing world. It's ever-changing more than ever before. So it's checking in regularly and understanding how the financial needs are changing over time, and really then using that information to develop the products and services, or bring in the partners to develop those products and services that meet those needs. And I will leave it there. Thanks, Max.
Thank you, Nancy. Also, very quickly, you talked about the Global South, your experience with challenges, but probably Trey can give us his experience with U.S. institutions about the, financial health strategies. So down to you, Trey, to share that with us.
That's a big question, Max, and I know we are short on time, so I'm going to kind of punt a little bit and point to some work that we've done that people can delve into this a little bit more detail. So first, I wanted to kind of piggyback on what Nancy said and point to a case study that we have on our website with BECU, which is a credit union in the United States that has used administrative data and survey data to measure their member financial health. And that case study talks about their journey of making this case internally in terms of getting the resources, building that capacity that Nancy was referring to, and how they got their stakeholders involved and what decisions they'd had to make. So I would recommend that anyone that's interested in what Nancy's talking about and was looking for an example of an organization that has done this, that way to look for that case study on our website, and we can try to find a way to share it with the group more broadly. And also adding to what Nancy was talking about, we released a report, I think about 3 or 4 years ago, about using administrative data and internal data financial institutions have to measure financial health. And a lot of those data points are ubiquitous across financial institutions, not US specific. So that's another piece of research that people can look at as they're thinking about how to embed this within the organization. And then piggybacking on kind of what Davide said about loyalty and retention in the business case, we recently released a report with Bank of America about how they have embraced financial health. And one of their key pieces is looking at, or shifting from looking at profitability across different product lines and looking at retention and customer loyalty, and how that has actually been a key business driver for them since they've been embracing financial health. And it tells the story about from 2010, after the financial crisis, when they are hitting rock bottom in terms of perceptions around the bank, and how that pivot and that movement to focusing on financial health and the financial well-being of their customers has been successful in proving that loyalty and lowering churn for the organization, which I think has been a key business indicator for them. And then finally, one last piece of research that I'm going to plug is we did independent research too of them, looking at what how people responded to when they felt that their financial institution had their financial health in their best interest. And we saw increases in customer loyalty and customer satisfaction and just higher levels of engagement with their financial institution. We'll try to find a way to share all these documents with everyone, but I just wanted to kind of put these pieces of research out there for everyone to use as a reference point going forward. So I will stop there, but thanks very much.
Thank you, Trey. Antonella, we have time to ask something else to Deborah. Or would you prefer to go to Q&A?
I have two questions, one for Nancy and one for Trey. And we have 3 minutes to closure. So maybe we quickly address the question from the panel and we close.
Yeah, okay. So let's do it quickly. And
one for you, Nancy, is the UK as the money and pension service will lead on the drive to improve financial well-being across 5 main agendas for change. Are you aware of equivalent bodies in other nations you work with?
Thank you, Antonella and Paul, for the question. I mean, maybe Deborah as well, with the experience with Opportunity Bank. I don't, off the top of my head, know of an equivalent in the context that we're working. I think this goes back to my point around this being collective responsibility, and where we're not necessarily seeing what we might see in the UK, Paul, that you described, where there's lots of different bodies that are involved in terms of kind of pushing forward and improving financial health. I think that's probably something, there's definitely a gap, and I'm not aware. I mean, you have kind of microfinance networks, but even those, I would say, are not necessarily have this as a main agenda item. I don't know, Deborah, if Opportunity Bank has any experience of a similar type organizations.
Yeah, I think certainly in Africa, a lot of the regulators that we work with are really focused on financial inclusion and beyond that, financial health. And just to give an example, perhaps I sat next to the one of the representatives from the Central Bank of Uganda a couple of weeks ago, and he was passionate about serving forcibly displaced population, particularly refugees, in the context of Uganda. And they're working very closely with FinScope, who do some of the financial access and inclusion surveys, and really looking at some of the data that they can try and get out through that surveys that does have actually a focus on financial health and resilience. So that was really encouraging. And we're seeing that quite a lot, certainly in some of the countries we work in Africa, yeah.
I have another question for you, Trey. So one, it is, if you can provide an example, maybe just 1 or 2 indicators on administrative data that are used to assess financial health. And based on that, also, how much research and investment in mapping and understanding customer profile segmentation is needed to be effective when integrating a financial health framework into a financial service provider business?
Okay, I'll try to do both in 1 minute. So you can look at things like income levels, or I guess savings rates and fluctuating savings rates, and looking to see if somebody would be an adequate emergency savings buffer, would be the type of like a savings one. You could be looking at people's spending habits and looking at to see if there are specific times where their spending tends to be higher or lower throughout the year, and use that as another way to try to determine their financial health, because it will fluctuate throughout the year. It will not always be healthy or low or unhealthy. It will change just based on kind of what their broad constraints are. So those are 2 examples. I'd push everyone to go look at the report that I mentioned earlier. And back to the segmentation, we have seen financial institutions use this administrative data to segment their customers. And what they kind of do is, and again, we're at time, but is use the data and not actually be very prescriptive in the beginning of the process, but more look and see, okay, let's look at to see what our percentage of our customers are struggling at savings, and then bucket those group of people, or what are the people that are struggling to get access to credit, or what are people that are having struggle with you know, building, getting access to insurance, right? Or covering insurance for, costs or something like that, right? And bucketing those people together. So using that data, either the survey data or the administrative data, to kind of drive what that segmentation looks like and not be too prescriptive ahead of time. I think that's the question that they asked. I'm trying to go really quickly because I know we're at time, but I'd happy to answer any of these questions offline if someone wants to reach out to me.
Great. I think we are just on time. I really appreciate the conversation about financial health. Is a topic that is close to my heart as well. So thank you, Nancy. Thank you, Deborah. Thank you, Davide. Thank you, Trey. Thank you, Max, for being part of this today. There is a survey closing off the webinar. I really invite all the participants to take it. It's really brief. 2 minutes, but it really enables us to understand what are your takeaways from this call and this webinar, what it is you're interested in. And this also will help us to shape more conversation like this one in the future. So please take the 2 minutes time to respond. You can follow us on our channel at Financial Inclusion Forum UK. In the invite, you have all the bios and the contact of the participants. Please feel free to reach out to them in case you want to take the conversation offline. The webinar has been recorded, so I'm going to share on our channel as well for those of you that were not attending online. And thank you very much for this insightful conversation.
Thank you, everyone.
Thank you.
Thank you.
Thank you, everyone.
Bye.
Thank you. Bye-bye.
Bye.